Welcome to the weekend episode of Rawstocks. This is Rustic. Holy shit, what a week we had. Nail biting, thrilling. We had FOMC come out and market tanked. Let's go ahead and take a look at Tesla stock and see where we came from this week, this previous week. Let's see where we could expect this next week to take us. So let's dive right in, all right? Today we're looking at the daily chart of Tesla. The big black candle from Friday just sold off into oblivion, liquidating and obliterating all the Tesla bulls that are sitting around waiting for that bounce, right? We called this shot. We called it last week. We called it the week before. And we're going to continue to call the trades as they come, reading daily price action to let you know where price is going, when it's going, and how it's going to get there. So let's go ahead and take a look at some of the things that we have on our chart that might lead us to know or at least give us some early indication of where price could continue to go from here. If it was to go up, if it was to go down, we're going to look at those right now. So things we got on the chart. Some of these things are from last week. Well, they're all from last week, but some of them started on Friday. Some of them were from Thursday. Some of them were from Wednesday. And so what are those? We're going to look at those now. Something that we want to draw our eyes to and draw our attention to is that we are right at a liquidity pool from this wick back on Friday, September 1st. Okay, we had a wick that started at, starts up here at 245 and goes down to 241 and some change, almost 242. So similarly to what happened up here, we could see price go down into that wick, draw on liquidity, and bounce, right? We called that right here. This exact move said liquidity built up in here. If institutions and smart money want to go short, they're going to run the price up into this liquidity. They're going to get all their orders filled. They're going to sell off. What happened? Exactly that. They sold off, right? So we have another wick. It's not quite as big. It's a little bit smaller. We just started to trade down into that liquidity today on Friday. And so could we see something similar play out? It's not quite the same move, and we had the big sell-off. So could we pull down into this wick where we know that buyers wanted to go long, trade down just a little bit further? Market probably wouldn't be expecting it after such a big sell-off, right? But could we trade back down Monday, maybe Tuesday, some small doji candles right into this liquidity pool, right? Buyers commit, bam, run it back up. So that's certainly something we could see. Another thing I wanted to note, if you zoom in on the chart, we got our fair value gap close, right? That's a daily fair value gap that was laid back here. The indicator doesn't show it. Sometimes the indicator will close it when it hits with wicks, but the indicator doesn't show that we have a fair value gap, okay, right here. We traded into it. We traded down exactly to the level, hit it with a wick, had a slight bounce. Okay, so this is not closed. The really interesting thing that it traded right there and chose not to close the fair value gap because the candle closed above it, right? So still open. So also we totally could see, right, what we saw here was that we were wicking it and we would bounce. It was a good level of support. We've said that fair value gaps are reverse magnets or opposite pole, pushing price away from fair value gaps, ultimately pulling price back into fair value gaps. Okay, so that's what's going on, but it could still offer one last line of resistance where we see some kind of small move back to the upside, right, where it leaves that fair value gap open just for a moment, kind of like a dead cat bounce off of the fair value gap, and then take that. Okay, so that's totally something we could see as well. So want to monitor this daily fair value gap. See if Monday or Tuesday price wants to keep this open. I would say if we don't close price below this fair value gap on Monday, there's a good chance we could see a small rally. Okay, and where would that rally might likely be to? Well, throughout the week we left a lot of clues, right? We have a 1 minute unbalanced price range. We have another 1 minute unbalanced price range. We have some previous 1 hour unbalanced price range. Okay, up here we have a 50 fib retracement Not sure if that's still accurate. I'll have to measure it here in a second. Let's go ahead and look at that real fast. Okay. 50 fib right here, roughly 61 and some change, almost 62. Okay, so that's still on the table. We know a lot of stocks like to rally back up to the 50 fib on retracement levels. So 50 fib, another unbalanced price range, another unbalanced price range, right? We also know, look at that wick, a lot of liquidity in that wick. Let's go ahead and mark it. Seems like a pretty good area of interest at some point, that if we were to start kind of making a run for the upside, but the move wasn't done going to the downside as far as the longer term move, right? Would we see price run back up here and steal that liquidity, right? Would institutions be able to get their orders filled to reshort this, to come back down and test this fair value gap? Definitely a probability, right? Certainly a possibility. So if we went to that 50 fib and came back up, let's measure what that fib level is if we were to make it back up there. Okay, again, using your fib tool. Well, look at that. 61.8 to 70, right? Optimal trade entry, golden zone, golden pocket, whatever you want to call it, right? I use optimal trade entry, the 70.5% retracement would take us right back into that liquidity pool, right? Even the 78 fib, probably up here a little bit higher, 75, 78, right? Could we run back up just like we did in this? Draw on liquidity, right? We got buy side liquidity. Could we draw on it where institutions would want to short again? So we're going to be watching that if we start getting headed up in the upward direction. To get up to that liquidity pool, we'd be taking out a negative fair value gap, right? So it also would be contradictory indicators, because we'd take that out, so it might seem bullish, but it would only be bullish potentially to this liquidity zone, and see if we got a reshort. So things I'm going to be watching for, right? Watching to see if Monday or Tuesday wants to close this daily fair value gap. Draw on liquidity. If it breaks that liquidity pool by much more, I mean, here we had this draw on liquidity, right? And it broke it by a little bit. But if it starts breaking it by too much, I'm not sure that I would expect a bounce. We could just see it continue to free fall. Things I'm watching for. Okay. I want to go ahead. I'm going to put that fib indicator back up, because I do think it's important to mark off the, well, actually it ends up being right where an unbalanced 1 minute price range is. So I'm just going to leave it. I'll know that this unbalanced price range is also in the golden zone for the fib retracement. So marking off this liquidity pool, right? So let's label this too, so we know what it is when we drop down into other time frames. For teaching purposes, I like to mark my liquidity pools in blue. You've seen this, because green is fair value gaps that are bullish, red is fair value gaps that are bearish. To me, blue is liquidity pools. The yellow boxes, which I don't have any on here, you can see above, are order blocks. So I like to keep things color coded. It helps me understand where they are if I forget to label them, or what they are, especially when we get into other time frames and you no longer see this wick on the daily candle. Okay, so just know whenever you're setting your chart up, if you don't set it up like mine, just know what you're looking at and make sure it makes sense to you. Okay, the color coding makes sense to me. I like to have things big and bold and bright so that I can see. I also like to change my candles to green and black, because the red for me is a psychological deterrent that causes me to potentially start to panic when I see the red, right? So the black helps ease that. It doesn't look like such a warning sign, and it allows me to, if I am bullish, see a candle like this and not instantly kind of have a panic response when it's bright and red, right? So I like to have my bright colored indicators be for other things. We also have the moving averages developing, right? So something I want to notice is that we are below the 50 period moving average by quite a bit. Okay, we are below the 20 period moving average by quite a bit, and we have a low grade incline on the 200 period, right? Right now we're at 199 and some change. Low 199, not above 200 yet. Okay, so we could chop around, we could drop, right? We could trade down, we could even trade lower than 212, 213, which is where we kind of saw that bounce previously, which if you look at it, it was a balance of this unbalanced price range. I'm gonna mark that off just so you can see it, right? But we had a change of character. I teach you guys change of characters and break of structures, create an unbalanced price range if price runs off of it and does not retest it immediately. And I'm not talking about one candle after where it well, in this case it actually broke but didn't close above, right? And then this one traded back down. That's not a balanced price range. I'm talking about this entire move created a change of character that we eventually came back down and tested, balanced the price range, and we bounced. Okay? We also have an unbalanced price range down here. Because technically this change of character didn't happen until this candle, and we have not seen that price rebalance yet. So we're going to mark that off. Not that we're going to get to 191.81. Okay, don't get your hopes up, bears. One day, unbalanced price range, but we don't know if it's going to get back down there. But if it does, that could be a likely target to balance that price range, okay? Not every price range every time gets balanced or gets balanced quickly. We still have unbalanced price range from back, I think, in the beginning of Tesla's days before we saw, such bullish momentum to the upside. So, again, we got the 200 period, right? So what we want to see moving forward, even if this starts to trade up, we want to see the 20 period curl over, okay? And we then want, because it moves faster, the 50 is going to come down like this. We want to see the 20 period potentially get retested, okay, as it curls over. And then we want to see price continue to the downside if it's going to remain bearish. What that would do is cause the 20 to cross back under the 50 period moving average and would allow, even if we chopped up and down, for price to come down, test this bullish fair value gap, test the 200 period moving average to see if we want to continue to the upside. Okay, that will be our kind of line in the sand, this unbalanced price range and this 200 period moving average. And if it fell quickly, we could see that price range balance, and then we could see it kind of pop back up above the 200 period and move up higher. Okay, so all things that we're going to be watching on the daily time frame. Okay, but I don't trade the daily time frame. It's just looking for clues on it. Let's drop down into the 1 hour and see if we see anything different. Okay, as we zoom up, we still got all of those reference points that I talked about. Okay, we also have this right here, which it's a 1 hour, got marked off. Sorry guys, I changed my labeling so that the price shows underneath. It's easier to see when I'm doing it on the mobile charts. But this is the 1 hour unbalanced price range here. Okay. We have the consequent encroachment of this volume imbalance from this candle to this candle. All targets to the upside. We're pretty blown off of the 20 and the 50 right now. And they're heading down, right? But we also are below the 200. So on the 1 hour, right, we could see this just straight fall out, right? Not off the table. We could see this try to either pop up over the 200 again and then see if the 50 or 20 want to support the continued move down as it rejects, or we could pop up and see the 200 act as support while the 50 and the 20 kind of come down and move back up. Okay, acting as support at that point if we were above it. We also could see, let's bring up the RSI and see we're oversold, right? So we could actually also see kind of a weak rally sell-off, right? Draw on liquidity, something like that. We could see some RSI divergence set up with a slightly lower low, pulling on this liquidity, right? We know the blue blocks are liquidity, right? And we could see this kind of bounce drop or just drop into it, right? A bounce drop would probably set up an RSI divergence. So we're going to be watching for that on the 1 hour, right? But ultimately we're going to be watching to see if the 20 and the 50 act as resistance. And we also have on the 1 hour, two different fair value gaps. Okay, I'm not going to mark those because the opening of this is also a 1 minute unbalanced price range, right? The consequent encroachment is pretty close to this guy right here, which is also, this is the 1-day fair value gap open, and then we have the 1 minute unbalanced price range right here. So all kind of around these fair value gaps. So we'll see if price wants to bounce up into this one, and then see if it wants to reject further off of that, or if it wants to break through those and start to run at some of these other price targets above. Again, we'll drop down into the 15-minute chart, see what we have going on there. Again, fairly oversold. It's just a bloodbath on Friday. Okay. Again, we're inside here. We're inside an order block. It should have closed it, but it still left it on the indicator. But we're inside of that. A lot of times you see bounces happen in order blocks. Oh, actually, it looks like maybe the order block goes into this liquidity pool. So we're still inside that order block. So we will be looking for, to see if this order block holds for a minute. Oftentimes, order blocks will act as areas for bounces, whether it's from above or below. And so we can look at for staying in this order block, giving a bounce, seeing again if these, these moving averages want to act as resistance to push us even lower. We are very blown off of the 15-minute 200 period. And so we could, again, also see as the 200 period starts moving down, see if we want to take out some of these shorter time frame unbalanced price range, potentially up to the 260 down to 252 and some change. See if those want to test, right? And again, as this comes down, we could see price reject off the 200 and then move lower, right? So all things we're watching, see if price can get above the 20 and the 50, testing the 200, or if it just wants to drive us down even further. Okay, I don't see any other unbalanced price ranges that are specific. I do see this one here really close to our other 1 minute, also the consequent encroachment of this fair value gap. So a little confluence there between the change of character and the fair value gap. I'm going to go ahead and mark that one just because it is a confluence point for two different things that we watch for. So I'm going to say 15-minute unbalanced price range, consequent encroachment of a bearish fair value gap, right? Negative fair value gap is bearish fair value gap. So another price range that we're looking for as we move up higher, but we have a lot of them. So at some point in time, we are going to come back for these, right? It's just a matter of when. Just for fun, we'll drop into the lower time frame charts so we can take a look at kind of what happened. I'm going to let you guys know that, and some of you guys who follow me, you guys saw this, but we were looking and we were live charting the trend line here. Right? It started as this, okay, and it had kind of a false breakdown. So when I was charting live for the traders in Discord, we were looking at this area right here, drawing a line, okay. We were barely closing above it. We had this trend line going. Okay, we were looking for a break out here, which we never got a breakout candle. We got a break above, but we never got a true breakout. Immediately sold back down, crossed the trend line. Okay, that was the first indicator we're breaking down from this trend. Right, we had a bigger trend going where we could connect some additional points. Okay. And we had some chop around on it, but we had this high, okay, and we had this high here, and it looked like when price came up here, never actually closing a candle above, and then started selling down, that the daily action was going to get bearish, right? Because we never actually closed any candles above this wick, which was the high of the opening candle on the 5-minute time frame. So from there, and then we started selling down, right? These were not necessarily awesome trades to enter. I mean, it would have been great if you got it, but there was no clear indication that you should take a short right here. Okay, what you do want to look for is daily bias, which starts to give us an indication of where price is going. We did have a unbalanced price range here, so you could have looked to enter when price rebalanced, okay? You could have also, if you got lucky, grabbed that because we did have a consequent encroachment of a volume imbalance, which it traded almost up to. So that could have been, maybe your first entry, right? Second entry, we're balancing the price range. So we're watching, we're falling below the moving averages, right, on this candle. But what I like to do is watch and see if it really sets up. So I saw this, okay, I said candle close, candle open, same line, gonna draw it out, caught a little trend line, broke the trend line, back tested the level, okay, that was where I said go short here. Said when we got down here, started saying we're gonna target right here is the daily fair value gap close, hit it with the wick, but I live called this and said we're going boom here. Many of us caught it. Some of us were still swinging puts from the day before, and they ended up paying out nicely. I think we had a 500 over 500%er go out on the live call out. So congrats if you caught it. Sometimes fun to be posting those live charting posts. So if you're not following me, you can find me. You can find the links down below, where you can find me hanging out in Discord. And we'll take a look at 1 minute too, just because again it's sometimes fun to look at. This is what I trade. I trade on the 1 minute chart. So similarly, right, we had this move up to here. We did, I believe, have 1 minute candle closes above. So if you look at this wick, we hit it. I'm gonna just I'll draw it out. So sometimes trading the 1 minute to the 5 minute can look different. And so it doesn't always give a clear indication. But if you drew that out, right, we didn't have a clear breakout. Didn't quite get to it. Okay, hit it with a wick, rejected with a wick. Had a candle close above. Okay, but you're watching, when you watch for trend line breakouts, horizontal level breakouts, you're looking for the candle after the point of break. Okay, so no break, wick, rejection wick. Okay, candle break, next candle, close down. What do we do? Rejection wick, traded right back up to it, rejected it, next candle down, fell below moving averages, boom, sell off. Okay, those are the kind of things you're looking for. Where are we going when we start breaking down from this kind of stuff, right? Got this kind of micro inverted head and shoulders. Be looking back to levels of support where we know. Look at this chop. Okay, where are we going when this happens and we break down? Boom, into the chop zone, right? But we also knew that there was what? Sell side liquidity. Okay, so beyond the chop, where are we targeting? We're targeting sell side liquidity. Why? Because stop losses are sitting in sell side liquidity. Boom, hit it, dumped it, right? Rebounded, came back up. But we knew that there was even more targets to the downside. So we got our daily fair value gap close here. So just different things that you can be looking for. Again, you know, we know we're in a sell mode. We've been calling out the sell mode on the YouTube all week. In the analysis, we've been saying institutions pretty much seemed like institutions repositioned back during the OPEX week to go short. So took sell side liquidity here, set a low, we bounced, right? We came back for this liquidity, sold off again. Okay, we got sell side, we got sell side. So targets that we're going to be looking at moving into the next week are those. Okay, we can also go back and we can set buy side liquidity for the bounce. Okay, and buy side liquidity, less interested in the 1 minute, but I'd be looking at right here where we also have that consequent encroachment of the volume imbalance and the 1 minute balance price range. So each one of these peaks is technically buy side liquidity on a 1 minute chart. Here, right? These are where traders went short, and there's stop losses at those entry points. So if they didn't already close positions, we got stops, right? Because we've already taken all the sell side. This way we even took this sell side. So we'd be looking at first buy side here, order block, right? Buy side here, order block. Buy side here, order block. So order blocks also kind of link up with the buy side liquidity. So there's going to be targets when we start heading upside to see if we can run on those stops if there's still stops there. So importance of understanding where liquidity sits, where order blocks are. It'll help your trading style if you know those things. So don't forget to like and subscribe. I appreciate all the support. We've gotten over 100 viewers just this week. Things are starting to ramp up. Seems like a lot of people are interested in the content that I'm creating and coming out with. So if you think there's anything that I could provide that I'm not already doing, go ahead and drop a comment. Don't forget to like and subscribe. We got some merch down in the description as well with some links to the socials. Follow them. Not everything gets put on every social, so be sure to follow them all. And be looking out for the upcoming tutorials where we're going to start to break down TradingView, how to use the different tools, how to use some of the indicators. I'll be sharing my custom settings with you guys. They're going to be different than any other settings you see anywhere else. So it'll make it easy to follow along when I chart for you guys. So hopefully this is all beneficial and you guys continue to come and view the videos. Again, I appreciate the support and enjoy the rest of your weekend.